Arizona's housing market is heading toward a storm, and no one's talking about it. From Phoenix to Mesa, prices that once soared are quietly starting to slip. The same cities that led America's housing boom are now showing early signs of a 2026 crash. Experts call it the silent correction, a perfect mix of high interest rates, overbuilding, and migration slowdown that could erase years of profit. In this video, we revealed 10 Arizona cities most at risk, what's causing the fall, and whether your hometown is next. Number 10, Peoria. Once a magnet for new families, Peoria's housing market is slowing fast. What was once a picture of suburban growth is now a warning sign of oversupply. Listings have more than doubled since 2024, while prices are down nearly 8% year-over-year. Rising interest rates have frozen new buyers, leaving empty homes across neighborhoods that once sold overnight. Experts warn that if current trends continue, Peoria could face its sharpest correction by mid-2026. Number 9. Gilbert. Gilbert was one of Arizona's fastest-growing towns during the 2020 boom, attracting families and remote workers nationwide. But the momentum is fading quickly. Oversupply and rising construction costs have left many developments half-sold. Mortgage rates and reduced California migration have cooled local demand. Realtors report open houses staying empty for weeks. With prices flattening and listings climbing, analysts expect Gilbert to lose between 8 and 10% of its home value by 2026. Number 8. Mesa. Mesa's housing market rose fast during the pandemic as investors poured in from out of state. But the rapid appreciation has now turned into stagnation. Average home values have dropped over 6% in the past year, with new listings at record highs. Many sellers are cutting prices just to attract offers. Even rental markets are softening as residents look for cheaper areas nearby. Mesa's once unstoppable momentum now mirrors a slow, controlled descent heading into 2026. Number 7. Surprise. Surprise became one of Arizona's hottest construction zones during the housing boom. Developers built fast, expecting endless demand. But now, supply far exceeds buyers. Streets filled with brand-new homes sit quiet, waiting for offers that never come. The city's inventory has surged, and many projects are being delayed. Analysts warn of a potential 10 to 12% price drop by 2026 if demand doesn't recover. For investors, surprise now lives up to its name in the worst way. Number 6. Chandler. Chandler's booming tech scene once fueled a massive housing surge. But after waves of tech layoffs and slowed relocation, that energy is fading. Demand from high-income buyers has fallen, while new listings keep climbing. Properties that once sold in days now take months. Local agents report record price cuts in higher-end neighborhoods. With fewer cash buyers and rising mortgage pressure, Chandler's housing growth is cooling rapidly, setting the stage for a significant 2026 correction. Number 5. Glendale. Glendale was among the first to show visible signs of a housing slowdown. Median home values have fallen nearly $40,000 since mid-2025. The city's affordability advantage has vanished as wages stagnate and listings surge. Many sellers are chasing the market downward with repeated price cuts. Real estate data shows a consistent decline across every neighborhood. Experts predict a deeper slide through 2026, warning that Glendale could become one of Arizona's hardest-hit mid-size markets. Number 4. Tucson. Tucson's housing boom is slowing as investor activity declines and new construction floods the market. Prices have softened steadily for 3 straight quarters. Rents are stabilizing, but home values continue to slide, leaving some owners underwater. With fewer out-of-state buyers, the market is shifting back to local income levels, and they can't sustain pandemic-era pricing. Analysts expect a continued correction through 2026, especially in suburban neighborhoods that expanded too aggressively over the last decade. Number 3. Scottsdale. Scottsdale's luxury real estate boom has cooled dramatically. High leverage, fewer cash buyers, and rising mortgage rates are reshaping its upscale neighborhoods. Once a seller's paradise, homes now linger on the market for months. Even million-dollar listings are seeing price cuts. Developers have paused new builds as demand wanes. Analysts project continued softness across the luxury sector into 2026, marking the end of Scottsdale's rapid climb and the start of a sobering market reality. Number 2. Tempe. Tempe's housing market once thrived on student rentals and tech relocations. But 2025 brought a turning point. Enrollment has flattened, remote work is shrinking demand, and new apartments have saturated the city. Mortgage rates have priced out first-time buyers. Analysts expect home prices to fall as much as 15% by late 2026. Tempe's transition from a fast-moving rental hub to a slowing high inventory market signals broader weakness across Arizona's urban centers. Number 1. Phoenix. Phoenix, the heart of Arizona's housing story, now faces its toughest test. After years of historic growth, the market is cooling faster than expected. Rising supply, fewer out-of-state buyers, and inflation-driven costs are pushing prices down. The same factors that built Phoenix's boom now threaten its stability. Economists predict the deepest price corrections here by 2026, with some neighborhoods already seeing double-digit declines. For Arizona's capital, the era of effortless growth is ending. The story of Arizona's housing market is more than numbers. It's a reflection of America's changing economy from Peoria to Phoenix. Every city tells a similar story of growth, speculation, and correction. But this isn't just about falling prices. It's about how a nation built on expansion is learning to live with limits. The next 12 months will reveal who adapts and who gets left behind. Because Arizona's market today might be America's tomorrow. This is the Changing America, where we explore how the nation transforms, one story at a time. Subscribe to stay ahead of the trends reshaping our cities, our economy, and our future.